Crude oil prices have recently moved sharply higher, with global benchmarks like Brent crude trading around $110 per barrel and U.S. crude, known as WTI, also crossing similar levels. This marks a significant increase compared to earlier levels this year and signals growing pressure in global energy markets. The key question now is not whether prices are rising, but why they are rising and whether this trend is likely to continue. The most immediate reason behind this surge is supply risk. A large portion of the world's oil supply moves through critical shipping routes, particularly the Strait of Hormuz. Recent geopolitical tensions in that region have raised concerns about potential disruptions. Even the possibility of reduced supply has been enough to push prices upward, as traders price in risk before actual shortages occur. Another major factor is market reaction to conflict-related developments. In recent days, crude oil prices have jumped significantly following escalation in tensions involving Iran and the United States. These developments increase uncertainty around future supply, which directly impacts pricing in global oil markets. Beyond geopolitics, production levels also play a crucial role. Oil-producing countries, particularly those in OPEC Plus, control a large portion of global output. When production is limited or not increased in response to demand, prices tend to rise. At the same time, global demand remains relatively strong, especially from large economies like the United States, where fuel consumption remains high. It's also important to understand that crude oil prices influence more than just fuel costs. When oil prices rise, transportation becomes more expensive, which affects the cost of goods across the economy. This can contribute to inflation, as higher energy costs are passed on to consumers in the form of increased prices for everyday items. Looking ahead, analysts are watching whether this increase is temporary or part of a larger trend. Some forecasts suggest that if supply disruptions continue, crude oil prices could move even higher, potentially crossing $120 per barrel in extreme scenarios. However, the situation remains uncertain. If geopolitical tensions ease or supply routes stabilize, prices could also stabilize. Oil markets are highly sensitive to news and often react quickly, meaning price movements can reverse just as fast as they rise. In summary, the recent rise in crude oil prices is being driven by a combination of supply concerns, geopolitical risk, and steady demand. While prices are currently elevated, the direction from here will depend largely on how these factors evolve in the coming days and weeks. If you want next